Hello, everyone. My name is Nancy Obando, your Senior Vice President at Mountain West Financial for Strategic Products. I'm so excited to have you here today. Um, the real estate market has been a bit of a roller coaster the last few months with a lot of different changes, but we have your back. And here are a few ideas to help you bolster your business heading into the summer with the Supercharged Purchase Playbook. You can learn how to expand your buying power for your home buyers and strengthen your clients' offers in the Supercharged Purchase Playbook. So I have two wonderful guest panelists. We have Sean Moss, who heads up product and operations for our down payment resource tool. And we have Jim, which is our sales manager for the Pacific region for MGIC. So I'm going to go ahead and start it off with Jim today. And Jim, can you tell us how we could supercharge our purchase playbook?
Excellent. Yes, and thank you so much, Nancy, and great to see Sean. We've done quite a few events together in the past, and as you said, it is quite a market. It seems like a couple weeks go by and we have new conditions, so certainly excited. As Nancy said, my name is Jim Labbe. I'm the sales manager for MGIC here in California. Samantha Steen is actually the senior account manager that supports Mountain West, but she is on a plane out to the Hawaii MBA. So I am pinch hitting for her, and I'm going to go ahead and stop my camera and get going with sharing my screen. Okay, so hopefully everyone can see the slides, and if not, please let me know. Again, Jim Labbe here with MGIC. When it comes to mortgage insurance, it used to be about those who had little to no money down. And I know Sean's going to do a great job talking about some of those programs. And certainly we love to support and participate when it comes to low down payment programs and affordable lending programs and any down payment assistance programs. What we're going to touch on a little bit more today is using mortgage insurance from MGIC as a financial tool in all aspects of your kind of toolbox. And so as we are likely seeing in the market right now, one of the biggest objections to home ownership is down payment. And when you look at what's gone on over the last 24 months with appreciation, that $500,000 home is now pushing maybe 700,000. That took a 20% down payment of 100,000 and bumped that up to 120, maybe even $140,000. Just significant in the increase. Now, that's great for those individuals that already own homes because they saw an increase in equity, and that makes everyone feel good in those circumstances. But it's also made it where it's a large obstacle for those who have been in the market or are considering buying a home. And how can they lock in today's opportunity without having to save, in the case that I just mentioned, $120,000, $140,000? Well, that's the power of mortgage insurance with MGIC. And when you look at this very basic illustration, you'll see obviously a $100,000 home, 20% down, $20,000 from the savings account that they've put together. When you look at a 3% down, $300,000 home, you can triple your buying power and still have some money left over. Now, depending on your market, we see obviously 3% down programs when it comes to Fannie Freddie, or 5% high balance programs. But either way you slice it, you're able to access so much more home with a much more affordable down payment and lock in today's opportunity. And if you just tripled these numbers and took that $300,000 home up to a $900,000 home, which might be a better illustration in some of your markets, it's still only $27,000 as a down payment on that 3% down, or if you had to do 5% down, just a little bit more than that compared to the 20% down scenario. So looking at MGIC mortgage insurance as a financial tool is really what we want to talk about right now. You can buy sooner, expand your options when it comes to monthly mortgage insurance, use it, then lose it. Keep more of that money in savings. Maybe you have other expenses coming up. Maybe you have kids that you're looking to save for college. And really, when you think about it, the minute you close on that home, your expenses don't stop. In fact, many people would say they just start at that time. And if you're buying new construction, you might have to do a backyard, window coverings, you might need new appliances. The time to think about using a lower down payment is before you close on that home, because accessing it after is almost impossible without using some, niche cash out programs and so on and so forth. So the conversation really needs to take place initially, and then increasing your buying power. So when you look at borrower paid mortgage insurance premiums, you have monthly, which is the traditional pay as you go. It's part of your monthly payment. We have, fantastic MI premiums right now when it comes to the private mortgage insurance side, and really rewards those individuals with good credit quality. Now, we also offer as an industry borrower paid singles. The benefit to that is it's a one-time payment. You can finance it or pay for it at closing. And you see that one item, sellers can pay. It looks like, or at least feels like, we might be moving into a market where less bidding wars might be taking place. There might be more opportunities for some seller concessions. Certainly something to keep an eye on depending on your market. And that would be an opportunity where they could use seller concessions to pay for the single. We're going to talk about financing that in a little bit. And overall, that's going to create a lower mortgage payment because you're not going to have that monthly MI. So two great options. And again, it's really about looking at your options when it comes to mortgage insurance with MGIC. So one of the things we talk about at MGIC is it's more than just a product. It's actually a financial strategy. And in this MI Solutions part of MGIC's website, we talk about a few different scenarios. The one we're going to talk about today has to do with low appraisal, or what we call sometimes appraisal gap. Now, maybe that's happening a little bit less than how you experienced it last year, but we're still seeing it from time to time. And this is a great way of using mortgage insurance for those borrowers that maybe have 20% down, but then they run into an obstacle. So when you look at this scenario, the listing price was $380,000. They had to go up to $400,000 to beat the competition and win that home. And ultimately, they would have to increase their down payment if they were seeing a $380,000 appraisal, which you're going to see happens later on in this transaction, versus the $400,000 that they offered. And we're going to go over a couple different scenarios here on what that might look like. So they can either come up with the extra money, if they even have it, that's an additional $16,000, or they can keep that 20% down, or at least $80,000 down payment that they plan to put in, and change the financing from an 80 loan to value to an 85%, therefore 20% down to 15%. They're actually going to see a benefit in the loan level price adjustment because there's a decrease in the LLPA, or loan level price adjustment, when you go over 80. So again, looking at this scenario, we have the traditional scenario that they were looking at, and that's all the way to the left where the home did appraise. Well, when the low appraisal happens, obviously that $16,000 would have to be added to down payment, and you would have a lower loan amount, of course. You'd have the same 80 loan to value, and you'd have a lower payment, but they had to come up with $16,000 more that they weren't expecting. So when you look at using mortgage insurance as a strategy to get around a low appraisal, now all of a sudden you can change your loan to value to 85, same $80,000, 20%, well, it's not 20% down, it's 15%, but same $80,000 down payment. And that overall payment comes out to, with a single premium paid at closing, or maybe there is, some other credits in the transaction, you would be at the same payment, $17.18 a month, as the original loan that Jasmine and John were expecting. Now, you can also go ahead and finance that single. So taking the $1,312 MI premium, financing it in, making that total loan amount $321, $312. So you're going to have a base loan amount and a total loan amount in that case. And then in that case, your monthly payment only goes up to $1,725, You didn't have to pay for it out of pocket, and you didn't have to come up with the extra $16,000 in down payment. And then the last column all the way to the right is where we're looking at a scenario with monthly mortgage insurance, still a fantastic option. And in that case, the monthly mortgage insurance is going to be $29 a month instead of paying for it monthly, bringing that total payment to $1,747. Certainly a little bit more than what they were expecting, but again, they saved $16,000 in additional down payment to just go up from $1,718 to $1,747, less than $30 a month. So that really is the power of mortgage insurance when it comes to an appraisal gap or a low appraisal. But you can also use it in situations where maybe someone comes to you with 20% down, and maybe they want to look at a larger home or a better neighborhood, or maybe you have a conversation with them and maybe saving 5 and 10% from what they were expecting to put down is actually a better strategy for them when it comes to what they can do with that extra money. Maybe they have some improvements they need to do to the home. Like I said, even on new construction, there's backyards that have to be done, window coverings, and so on and so forth. So having those conversations before they close on the difference between 20 down, 15 down, and 10 down, and using the strategy of single premiums that are paid at closing, maybe with seller concessions if we start seeing more of those, single premiums that are paid by financing it into the loan amount, and then obviously monthly. All of those are great financial opportunities for the borrowers, might give them more purchase power, might allow them to win a home, or might allow them to hold back some money for some of the strategies that I discussed. This is Samantha Steen's contact information. Again, she's currently on a plane out to Hawaii for the Hawaii MBA. We absolutely love our partnership with Mountain West. We absolutely love that they're putting this together, and I'll be available later to answer any questions. So Nancy, that's all I had right now from my side.
Sorry, I had to put that down. Thank you so much, Jim. That was so valuable. I mean, you're right. It's all about knowing all the options that are available for your borrowers and your clients and picking the best one. So sometimes 20% down is not the best option. Sometimes it is, but it's all about knowing what tools and resources you have available. Now, this is a great segue now to talk about some of the down payment assistance programs that are available if the borrower doesn't have enough down or that 20% down where they could play, necessarily with the MI. There are other options available for you as well to supercharge your purchase playbook. So I would like to introduce our next speaker, Sean Moss, who heads up the product and operations for our down payment resource tool. Sean, take it away. You might be on mute, Sean. I see your slide, but I don't hear you speaking yet.
Sorry, I was on mute. So thank you, Nancy. Thanks, Jim, for a great setup there too. So I want to actually start with just kind of a brief overview of down payment assistance programs. So that's kind of a broad category, and I do want to talk about how down payment assistance can be used to achieve conventional financing, and that's, I think, one often overlooked benefit or scenario. But just looking at down payment assistance programs in general, and part of what we're doing here is taking the realtor perspective. We're not trying to make you guys experts, right? You've got the support of your loan officer partners and your Mountain West team here to help you navigate these nuances. But there are down payment assistance programs that are grants. That's a true gift at closing. There's no second lien on the property. There's nothing due in the future. It's a gift at closing. Some down payment assistance programs are repayable, which means maybe it's interest bearing or maybe it's 0% interest, but you've got to qualify with that payment. Some down payment assistance programs will defer the payment of the assistance amount. And if they defer for long enough, maybe you don't have to use that, or maybe you don't have to qualify based on what that future payment might be. And then, of course, some programs are forgivable over time and may even defer the payment in the process. So all of those are just different repayment structures for down payment assistance programs. And I wanted to start with that because when we say DPA or down payment assistance, that is a rather broad category that encompasses quite a number of different repayment structures, program types, assistance amounts, qualifying ratios, and then you get into geographic eligibility and availability and so forth. So wanted to start with that. And before I go any further, part of what we're trying to do here is make sure that especially you real estate agents understand that Mountain West's loan officers are here, they're trained, they're trendsetters, their product team, the Mountain West product team, and Nancy and her team have gone to great lengths over many years to make sure that they have all of the products and solutions in place for you and for your clients so that we can bring education and awareness and solutions to that biggest obstacle to homeownership, the down payment, as Jim said, when we're talking to prospective home buyers or when we're talking to aspiring home buyers, and you guys can partner together with your Mountain West loan officers to bring those solutions to the table and bring home the home buying journey to people that maybe were sidelined because they thought they had to have 20% down, so they gave up. They didn't react to your marketing, right? So Mountain West has almost 200 DPAs available across their footprint. Over 120 of those are in California, and all of those are available in one of the tools I'm going to show you. But before I do that, let's break down some DPA information here for a moment. So down payment assistance is for owner-occupant buyers. We aren't using these programs. We can't use these programs to purchase vacation homes or investment properties. They all come with a minimum buyer investment in some form. That could be $500, $1,000, 1% of purchase price. That's going to vary by program. Many of them require completion of a home buyer education class. And given that, we want to make sure that we cover the things up front that could create obstacles down the road or delays, or could be blamed for a delay in a transaction. If knowing that home buyer education is often required, we make sure that we get that class done early and before pre-qualification, then we've eliminated one of the most common obstacles that might be perceived as the fault of down payment assistance, for example. And then lastly, we also know that these are not cash buyers, right? If we're looking to grow our purchase pipelines, if we're looking to pull some of those aspiring home buyers, current renters off the bench and illuminate a path to home ownership for them, we're going to have to do so by illuminating the kind of mortgage financing available to them, but also making sure they understand that there are solutions out there for the down payment obstacle. And let's not lose sight either of the fact that these down payment programs can help significantly with ratios as well. We'll come back to that in a moment, but it's not just about down payment. We know that right now sellers are not going to accept closing costs, right? Your loan officers, you're probably getting on the phone talking to listing agents and sellers over the last year, year and a half, and saying, hey, I know these DPA programs, I'm going to get this deal done, but some of these programs will cover closing costs. So knowing that, we want to create, and knowing that we want to create as much advantage as possible for our home buyer clients, our borrowers, we want to take advantage of all the benefits, and we want to frame all of the benefits as such when making an offer, when trying to win bids. And the fact that a lot of these programs will also cover closing costs is a big deal. Sellers aren't going to pay that right now. So again, every advantage we can give a buyer is going to go to great lengths toward helping them achieve or explore first and then achieve home ownership. And then some programs will allow prepaid expenses to be covered by the down payment assistance. And maybe there are even some rehab programs or DPAs that allow property repairs. We won't get too into that, but I want to clarify a myth too. When we talk about down payment assistance, you can own a home in the past and still be a first-time home buyer. As long as you didn't own in the last 3 years, that's basically the universal rule or definition of a first-time home buyer for the purpose of down payment assistance. So agents, when you're talking to or marketing to potential home buyers, make sure they understand as well that you're a first-time home buyer if you haven't owned, or in most cases, owner occupied a home and been on title to it in the last 3 years. And then some of the terms you might hear, and these are sort of they're not synonymous, but used interchangeably. And so that's why we like to do this, is just clarify DPA, or down payment assistance, as we saw earlier, is a very broad category. Some are grants, true gifts at closing, right? We mentioned that some are forgivable, some have deferred payments. The affordability period is essentially the period over which that program might be deferred or forgivable. But if it's not a grant, it's going to create a second lien or a subordinate loan. Those are basically synonymous. But you might hear all of those terms, or any of those terms, used as if they're interchangeable, and they aren't. Most of those are distinct features or repayment structures. And then as far as eligibility, again, all of which your Mountain West loan officers can help you with. Income limits, purchase price limits. Most programs have them, but it varies by household size. It varies by geography. It varies by program. So it's good to have a partner working with you that understands these programs and has many options available to assist you. Property location or geography, big deal, right? Where that buyer wants to buy a home determines which universe of programs are available, and Mountain West offers tons of them. And then we can kind of look at, okay, what's available from the state, from the county, from the city, from a local nonprofit? What's the best option for this buyer? And speaking of what's the best option, I want to talk for a moment about some of the tools that your Mountain West loan officers have. In the background, behind the scenes, they've got access to a DPA portal that helps them immediately match your clients to the best available products and programs based on their household information, where they want to buy a home, if perhaps they've served in the military or work in certain professions for which there may be additional DPA, down payment assistance programs, or other opportunities. They can account for home ownership history. And then lastly, most of these programs have a minimum FICO and credit criteria. And again, that's going to vary by program, as most of these requirements will. But all that is to say, your Mountain West loan officers understand these requirements and also can help you navigate these requirements and these eligibility criteria, so that we can help more buyers accrue the advantages of down payment assistance. Or we can help, more importantly, create buyers out of those who sidelined themselves because they thought they had to have 20% down, or they didn't understand, down payment requirements, or they just gave up because they thought, the market melted down and DPAs went away. Who knows? But some of the advantages are the obvious, right? If you make a bigger down payment, you lower the loan to value. That can open the door to better first mortgage options, better MI pricing. We also know that as we continue to lower loan to value and improve mortgage pricing and potentially improve interest rate as we open up new first mortgage opportunities, we are reducing debt to income ratios. So loan officers, when you've got a loan app that's borderline on cash to close, doesn't look like maybe they're going to have enough cash to close, obviously we would look at a down payment assistance program. Maybe you're just not getting the AUS findings that you were hoping for, and maybe specifically because the ratios are borderline, or the ratios are a little too high. Well, take a look at a down payment assistance program. Or agents, maybe you had a lender elsewhere that couldn't get a deal done, but they weren't savvy with down payment assistance, and they weren't looking at that loan through the lens of the opportunity that down payment assistance programs can provide. And throwing 20% down, let's just say 20,000, throwing 20,000 down into whatever deal they already had, whatever savings they already had, maybe that can help, again, open up the path from FHA to conventional financing, drop the upfront MI, get better monthly MI, reduce the interest rate, lower the LTV. All of this compounds to lower the qualifying ratios. So DPAs can also be a path to reducing qualifying ratios and opening the door to more buyers that way. And then, of course, there are the obvious benefits of supplementing their cash to close. So they've got a little bit saved up, use a down payment assistance program. As Jim said, or as he illustrated earlier, now we're increasing their purchasing power, holding income steady, right? Didn't change income. We just supplemented their cash to close. In doing so, potentially we can help them save or keep money in savings, remain liquid when they move into the house, so that they're prepared for the obligations and responsibilities of, and potentially pitfalls of home ownership, long-term successful home ownership. So I want to turn to a kind of a quick demo here of this tool that you guys have access to through your Mountain West financial loan officers. So I'll first show you how Mountain West's loan officers are using this tool. This is a DPA portal that you can all use to engage with and educate the consumer about down payment assistance programs while giving them both a path to connect to the assistance that's out there for them, as well as a direct path to you to start and continue that dialogue about homeownership. So again, think of the people that are on the fence or on the cusp, or rates just went up, so they thought, I give up, there's no way I'll qualify now. Or maybe they've got $5, $10, $20, $30,000 saved up and they don't feel like it's enough. Let them know that there are solutions out there that can help, and more importantly, that homeownership may well be within grasp or within reach. So that was a long setup there, but here's one example of a Mountain West loan officer. So we're going to pick on Vanessa here. This is her Mountain West website. And if we scroll down below her bio, there's this link, down payment money is available, see if you're eligible. This is what Mountain West loan officers are using to engage with consumers. And then I'll show you the agent version, because one of the biggest benefits of partnering with Mountain West for you agents is that you can take that same tool and you can apply it to your marketing. And we can look at any loan officer here. So we'll look at Elena's page, scroll down, there's the down payment button, right? And all this is doing is letting the consumer know that down payment help is out there, and then giving the consumer the opportunity to search for down payment programs where they want to buy a home. Even if they don't have an address in mind yet, they can account for other features or household criteria or factors if they wish to do so, but we don't have to. So I'm not going to talk about income, homeownership history, veteran service, military service, profession. I'm just going to skip over all that just to illustrate that we don't have to answer any of that. And now anything I do, because I started from Elena's down payment portal here, it's going to go back to Elena. So I, as the home buyer, found 19 programs. I could get up to $74,000 in down payment help. I'm going to fill out this form, and that's going to notify my Mountain West loan officer that, hey, Sean just did a search for down payment help. He's looking to continue this conversation. The idea of down payment assistance was clearly compelling. Here's his contact information. Give him a call, start that pre-qual, get set up. So let's take that idea into your own marketing. And if I can, for just a couple minutes here, I want to show you some examples of how agents use that same tool that you now can get from your Mountain West financial loan officers for free. And Mountain West has a tool to help generate those URLs for you to make them unique to you. So here are a couple of examples from others around the country that promote the idea of down payment assistance on their site and can partner with loan officers, in your case, your Mountain West loan officer partners, to bring awareness of these programs to your prospective homebuyer audience, to your prospect base. So here's just a blurb on your website. What do you have on your website that speaks to the buyer, that speaks to the first-time home buyer, or that speaks specifically about down payment assistance, which you'll see here in a moment? If I click on this, I'm going to go directly to that down payment search. I'm going to start that search process, and I'm going to connect with, in that case, you, the agent, as well as your Mountain West loan officer partner. You both get notified in real time. So you can pick up the phone, call that client, say, hey, my loan officer also just got this. They're going to get you pre-qualified. Let's you and I get set up for your home search. Let's connect with our loan officer. Let's make sure the pre-qual is going well, get your pre-approval letter, and get you out shopping for a home. So carrying that idea on here, this is another team here that just added on the menu to their website, down payment assistance. So again, how are you broaching the topic of down payment help to aspiring home buyers? This is just a simple website navigation item. Click on it, and the down payment lead generation page that you get from Mountain West can load up here. Let the consumer do their search, let them connect with you, and you're off to the races. Here's a slightly different example. So this is a team that actually built a page dedicated to down payment assistance, And again, we're looking at realtors and brokers all over the country using the idea of down payment assistance to educate buyers and to try to compel conversation. So this team added some educational content about down payment assistance, and they actually added quite a bit. They did a good job of writing out a lot of content here. Not to say that that's what you need to do to get consumers interested and engaged. However, this is one approach. Or if you already have any content like this on your website, that's a great place for you to add a link to your down payment lead generation tool. So you can add the tool into the text as you see here. This team, this brokerage is educating buyers about several different criteria related to down payment assistance, family finances, home ownership history. Does your profession make a difference? This graphic is another link to their down payment portal. So again, I'll click on that. Buyer starts their search, down payment money is out there. Let's see how many programs are there. It's a lead generation tool. So the buyer fills out the form, or the aspiring buyer fills out the form, and that goes to both you, the agent, and your Mountain West loan officer partner at the same time. This is a similar example. This is in Seattle under advice for buyers. So again, what do you have? What kind of content already exists in your social or your email or your web marketing where you could weave in this down payment search experience so that buyers, one, have the opportunity to become aware of these programs, but two, recognize you as a critical resource who's providing information about solutions they had no idea about. So here's another example of a team in Seattle that added down payment assistance information to their website. A few paragraphs here, just educating visitors, site visitors, about down payment assistance programs, and then they just embedded the form right there on their website. So I'll change gears here. If any of you have a blog, then you're always looking for content, right? So write about down payment assistance, write about solutions to today's affordability challenges, and put that out there to your audience. I point this out as just yet another creative example of marketing to aspiring home buyers in partnership with your loan officers, and making sure that those buyers are aware of solutions to help them with down payment, to help dispel some of the myths or misperceptions that may linger in their mind that keep them from reacting to your marketing, or that convince them that home ownership is not within reach. So, hey, down payment money is out there. Let's find it. Well, what is down payment assistance? A brief explanation. There's a video. There's a process. Click the down payment button, enter your household, get your results, call me and let's talk. And then intuitively, you know, the next step is then we're going to call that Mountain West loan officer. We're going to continue that dialogue and work towards that pre-approval letter, and then get you out shopping for a home ready to compete. So I'll go to social here just for a moment, just to, again, give you a few more ideas. Simple posts, things to know if you're buying. What do you know, Mountain West has tons of content for you to repurpose and utilize. Loan officers, you guys have some great content that I know your marketing team has put together. How are you engaging on social? Agents, great example here, couple sentences. This is a realtor in Detroit. Down payment money's out there. Let's find it. Use my page to find these programs. There's the link to their down payment page, their DPA search portal. Super simple, couple sentences, get the message out there. And every time that a consumer engages with that tool, they're engaging with your Mountain West loan officer partner as well. And then the last example I'll show you is this is a team in the Twin Cities. They tell the story of past clients who got down payment assistance. What a great way to connect with and resonate with future home buyers, with aspiring home buyers. Let them know that their peers have just gotten into their first home. Their peers just used the down payment assistance program to make sure that that happened. And then co-market. So for all of you, use all these as hopefully as examples of how to engage with aspiring home buyers, how to get the message out there that there's help. And for you agents, you are supported by your Mountain West loan officers, not just with that down payment assistance lead gen page, but with their knowledge and expertise pre-qualifying these buyers as they come in as well. So with that, Nancy, I'll pass it back to you, and I think maybe get into some Q&A.